management on board of CAMS to try and understand what their Q4 performance was looking like and what's the outlook going forward. We have with us the management joining on the show, Mr. Anuj Kumar joining us to talk to us about how the outlook of the company is likely to pan out. Hi Anuj, thank you so much for making time and speaking with us. Well, the earnings are largely in line with what the street was expecting, given the fact that there was a bit of slowdown in the mutual fund side of the business over the last few months. What's your expectation of how the first half of FY24 is likely to pan out?
Sure. Thanks for having me over on the show. I'll just quickly give you a summary in terms of what happened in the results here. Right, they are in line with our expectations too. The mutual fund market grew assets in terms of about 5% during the year. So revenue growth riding on that was muted. We did see our equity market share jump up by about 0.5%. Now that has to sustain over the next 2 or 3 quarters, but that's a good beginning. Our equity net sales number went up by almost 9% during the quarter. And some of that is just the impact of our key mutual funds coming back into the market in terms of their scheme rankings, etc. What we also saw interestingly on the debt side, where you would have noticed that after the announcement of the rollback of taxes, it was expected that sales in the market would dry up, but the last 10 or 15 days of March were hyperactive. And even beyond that, in the month of April, we've seen about 9 to 10,000 crore of net sales happening in debt. And in fact, after the rollback, those are much better numbers that used to happen in the past. And we've seen some general accretion in terms of mark-to-market gains. So if all of this happens, I'm sure that in the first half, asset gains will be significantly superior to what they were in the last overall year. And given the fact that our equity market share has gone up and equity net sales numbers gone up 9%, our SIP collections rose to just short of 8,500 crore. They were 8,400 crore a month in about the March month, growing by between 100 to 200 crore every month. So my guess is that as the interest rate regime peaks, which it was supposed to peak in the last 3 or 4 months, and if we see some salutary impact on the marketplace in terms of both equity investing and the attractiveness of medium and long-term debt becomes better, we will see better assets and we definitely see better prospects going forward.
Mm-hmm. Anuj, there are some, tectonic shifts happening among investor community in India. One, that there's a lot of money moving into financial assets, both debt and equities. And in particular, equity allocation is going up. As much as this seems to be a structural case, there is also, kind of sustained pressure on the, all these mutual funds, the kind of charges which they charge to the customer. If the yields on financial products head lower, how would it actually impact your margins and growth both? Because growth is kind of getting assured, but at the same time, pressure on yields is also becoming structural.
No, you're right. The expectation from the industry, although the industry claims to be delivering one of the cheapest services globally, and that is mark to market, the expectation is that as an industry, we will bring it down further. The only thing I would say is that our pricing is telescopic. So in a growing market, assets have grown almost 18% CAGR over the last 8 to 9 years. Our services have become cheaper year on year. Today, we sell at one of the lowest rates available anywhere in the market. If you benchmark us against banks, insurance companies, demat folios, whatever domestic metric you want to apply, and our scope continues to enlarge. So we are very sure that we have demonstrated sustained value in the marketplace. Of course, we are also watching the space intently to see what happens to TERs. But I'm confident that our clients and the market understands the value that we deliver to them, and therefore appreciation of that value will help us just hold yields over the medium to long term.
Okay, but what about the non-MF portfolio? What kind of growth are you envisaging there? What could be the contribution coming in from the non-MF vertical?
So there, in fact, if you've noticed our release, our results have been great in 2 segments. Alternates, where we grew revenue 26% year on year. Payments, where we grew revenue 27% year on year. And you know that we could have significant tailwinds in the insurance repository business. Of course, the announcement for demat hasn't come in yet. The precursor to that has. But even without that, investors, just given the buzz in the market, the number of insurance accounts and policies being dematted has grown to 2x of what it used to be in the earlier quarters. So what we are expecting is that riding on these three, we should be able to expand our non-MF revenue market share. From what it is at about 10%, has grown to about 11% in the quarter. Expecting it to creep up further. You would have also seen the acquisition of Think 360 will add about 2.5 to 3% of this non-MF component to the overall kitty. So I'm confident we will be touching 15%. Whether it happens by 4Q of this year or 1Q of next year is a question to be seen. But we are scaling that revenue and we are scaling it profitably.
Anuj, before we let you go, just wanted to understand, every day these days, even in the Berkshire AGM, there was a lot of talk around the application of AI, Chat GPT, and other things. So what we are doing here on ET now is that we are trying to explore all different kind of businesses which come and chat with us on the channel on application of artificial intelligence, etc., in their respective industries. You also seem to be making strides in that side. Talk to us, how does it aid your own business, and to what level have you started scratching the surface on artificial intelligence?
So AI today in its basic forms is used to spot trends, potential fraud incidents, things like algorithms which do name matching, face matching, etc. All of that is kosher and that is in the base. However, from a customer service perspective, that is one big opportunity where an intelligent AI platform like ChatGPT can help detect consumer sentiment, the queries they're asking, and automate some of that. And that's not just cost takeout or labor takeout. It's also about delivering these services much faster and driving consumer satisfaction up. So I think those kind of uses will emerge, and some of these will emerge within the year. Microsoft is a key partner for us, so we continue to explore all of these initiatives with them.
Okay, Anuj, on that note, we'll let you go. Appreciate you joining us on ET Now today. In the meantime, let's flag out some